into Monday, you get a reversal or you stay down. And then if it stays down, we're looking for that Tuesday reversal and then what I'll call that flub-a-dub type action. But since we're on a weekend edition of our charts, we look at this all differently. We're going to take a look right now, and we're looking to see what the monthly area chart of closes has done. And as you could see, this market's come down, finishing off now at 25.24, which is right facing this area that we were at last time into those lows. Now the question is, does the market do something else? For the month, I can't tell you yet where it's going to finish because we have a couple of days left, but so far it's not looking that good. When we look at a weekly area chart of closes, you can see you've come from this 33.81 all the way down, got a bit of a bounce this week. Can't argue that. The market is up for the week 3.5%. Not bad action, up 86 points overall. When we go to the weekly chart with nothing on it at all, you can see how you came down, the little bit of a bounce that we've got in the market, but the swing lines, and this is the difference. Here's this same chart without a swing line on it. And when you put the swing line on, you can see that you have your pattern of lower highs and lower lows. So that is still in the bear camp. When I put key moving averages, the 200-day, the 100, and the 18-week average on the charts, what I see is that the market got a bounce back into this 200-day average zone. It did it last week. It's doing this week. I'm not seeing it much more than that. And if you looked at my daily charts I was showing on those yesterday, how all you had was about a 33% retracement in the market. Still not acting, in my opinion, all that bullish. What did the market try to do? Well, if you look at 25.24 as the close, and you look where the market finished at 25.56, you can see that what the market did is it got itself, rather the 25.56 is the 18-day average. It tried to get up and over it. It couldn't do it. It just stayed right under it. That gives us this week that the market's under that. Last week when we look at the closing basis, you can see how the market finished here to the lower Bollinger Band. So you're getting stretched out now. You typically don't go more than 5, but that still leaves a couple of weeks left that we can go before this market turns itself. In momentum, on a weekly chart, I don't look if the market's overbought or oversold. I purely look to see is the market pointing down in momentum, pointing up, or sort of neutral. It's trying to, if you will, coming into this weekend, it certainly wasn't pointing down anymore. The question is, will it with the news that we get over the weekend? Can't answer that. In the NASDAQ, on the weekly chart, you came down, challenged the 200-week moving average of closes, came back to the 100-week in the Bollinger Band. Now you finished off at 75.68.5, just over that lower Bollinger Band. It might sound like that's stronger. It's not necessarily. It means this market doesn't owe quite what the S&P does, and it's still very vulnerable. But I am impressed that the 200-week moving average held, but that's all that I could say. I also think that longer-term traders that have been bearish this market took some money off the table against that key average. In the Dow, you're underneath all the key averages. You're under the 200, the 100 in green, and the 18. This is still quite bearish. Now, we finished off at 21,437, and as you can see, that's just underneath the lower Bollinger Band still. Last week, if we look at how the market finished, it was finishing off at 20,255 under that lower band, under the lower band here, but above it. So you've got a little, actually that's below it too, that's 4 under it. You're going to keep going? You could. It's just a sign of how weak the market is, but you typically make an attempt to get back over that Bollinger Band after 5 weeks in a row down under it, and we certainly are at that right now. So this coming week would not surprise me, is no matter how bad the information is, that the market tries to finish the week off above wherever that band comes in when it reopens on Sunday night and goes the rest of the week. Remember, the band won't just set itself from a Sunday. It's going to look at the whole week's action and adjust itself. In the Russell, similar action. You can see how the market's just staying under these bands. Finished off today at 11,020.30, so that's 5 weeks in a row under it. It's a sign of immense weakness, but again, it tells me not to be pushing too much on the short side under these lows, because the market's liable to come back and, like a snake, bite you a bit. That doesn't mean I'm bullish. It just might come back to bite you a little. In the VIX, you're staying over the band. It's the flip-flop of what the futures are doing. Still looking to me very, very good and like it wants to start is the 10-year notes. And the 10-year notes is running the band. So that's bullish sign. Again, this is a market that broke out from sideways action. It had quite a bit of it. Basically, from last October all the way through here, the market was trading in a somewhat sideways action. It then got, of course, the COVID news as the market took off February 28th over the band and just kept itself going at this point. You get these little pullbacks, and this is what I was saying in the stock market. You can get these type of pullbacks where the market makes an attempt to get back in the band, then it went right back to the top. It does not mean you're changing trend. The trend is up here. Will the market go for the highs that it made 2 weeks ago is more the question I have than anything else. And in the dollar index, wow. This dollar index is really, I think, just killed traders. You had a vertical price decline from an upper Bollinger Band to a lower one in a 3-week period. You then had a reversal, a rather dramatic one, the week of March 13th, and then the market takes off to the 20th. This is dramatic. By any stretch, that's a 10-point move, and suddenly the market just turns back, and now it's running towards that 18-week moving average of closes. It's probably the most violent I've ever seen the dollar index trade, and it's the flip-flop in the eurocurrency, which went down, up, challenged the 100-week average, the upper Bollinger Band, and right back down. It's been, for currency traders, which is normally one of the biggest trading vehicles in the world, a real mess of a week this week. In the Canadian dollar, we came up rather strong, finished the week up much stronger than I thought it was going to do. It climbed back into the Bollinger Bands, but the overall trend is down. So yes, this market can get more of a bounce as it's getting a momentum that's turning up in it, but you still remember that you have lower highs, lower lows. All you did is stay within the bands, and now you've moved back to the right-hand side. In the Japanese yen, it's very similar to how crazy the dollar's been. You had that small vertical decline and then a pop and a massive move back down. If you can catch those, great. It's almost impossible the way that I talk to traders, and it's just been whipsaw action. Bitcoin is still under some selling pressure on the weekly chart. You still got the lower highs, the lower lows. Now remember, as we get closer to May, they're going to be halving these coins. That's the formula that Bitcoin counts on, that same computer power, what happens is it still makes less coins. And that happens in May. We'll see if the market starts responding to that. This big break that we had when you got under the Bollinger Band, this black line, all it did is pull back into it. The trend is still down on this chart, so I'd be paying close attention to that. In the Brent versus WTI crude, back into the 340 level. Now, on a weekly basis, the market had gotten down as low as near 2.25. Then it gave you a bounce, and it's pulling back in. When we take a look at Brent crude oil futures, you can see how this market is fighting against the Bollinger Band right here. The settlement was 24.93 over the, well, not over, but back to fighting against it, and still under. So we got 1 week under, 2 weeks under, 3, 4, that's 5 weeks in a row under. Will you go a sixth is the big question. I can't answer that. I am still very bearish to Brent, but I can understand it climbing back into the market. Why am I bearish? There's just too much supply given how bad the world is with nobody driving, flying, whatever it is. Same thing goes for the WTI crude. Under it, move to the right, you can see the trend is down. Momentum is still pointing down, nothing friendly on that chart. Same in gasoline. And gasoline market, wow, what do you say to something that's 57 cents? I don't remember prices like this. I have to go back and do some research as to last time it was down there. So you put it all together, we have a very bearish market situation still. We're going to be all paying attention to what the news is come Sunday night. How bad are the COVID cases? How bad is New York, New Orleans? Orleans, we're going to be looking at that. And in Chicago, of course, they're getting us ready. They claim that our numbers are going up and going to go up rather dramatically. I wish you all the best. You might want to take a look at all the things that we have to offer by going to our website at www.iraepstein.com. You'll see our free offerings on the bottom right. Just click it and choose away. I'm Ira. You have a good day.